Welcome to the AICA conference in New York City. I'm Jane King. With me is Dana Staggs, the president of ArrowMark Financial. So explain what ArrowMark does.
Yeah, ArrowMark Financial Corporation, we're a closed-end fund registered investment company. We manage about $200 million in total assets today. It's a banking-focused closed-end fund, but primarily we invest in an alternative investment product called regulatory capital relief securities. We acquired the management rights to this fund in early 2020, and so today we've migrated the asset base to about 90% regulatory capital relief securities.
So let's talk about the regulatory capital relief securities. What are those exactly?
Yeah, so regulatory capital relief securities, I mentioned that they're an alternative investment, but more specifically, they're an investment in a security that's issued by, for us, the largest banks in the world. So think of these as the money center banks, sometimes the globally systemic important banks, household names like JP Morgan, Goldman Sachs, Barclays, so on and so forth. And what they do is allows the banking institutions to help manage regulatory capital ratios. Regulatory capital ratios are how regulators oversee the banking institutions. And what they use these regulatory capital relief securities, they use these to transfer risk from a high quality portfolio of loans from their balance sheet. Some of that risk they'll transfer to our investors. But the benefit of it is unlike other types of situations where they may sell assets, in this particular case, they're still the lender of record. They still have the customer relationship. And so whenever they're doing loans to somebody like a Pepsi, for example, which is very key and core to their business, they have to maintain that customer relationship or that loan. And it gives them that flexibility to do that.
So I imagine interest rates have been a big focus for you over the past few years. How has that impacted your business, and do you have any kind of ideas of where interest rates may be going?
Great question. So these products, we've been doing these products since 2010. So we've got a 14-year track record, and they've been performing really well in what I would say is a near 0% interest rate environment. So they are floating rate securities. They are affected, at least their income production is affected by differences in the floating rates. But their asset sensitivity, because they float, they don't have valuation asset sensitivity to the interest rate changes. As far as where we see interest rates, various factors impacting them, we do think that the interest rates are going to go down. I think by the end of the year, we're talking about 25 basis points. But in general, unlike what we've seen in the last decade where we were operating in a near 0% interest rate environment, I think that's changed. I don't think that's going to happen anymore. It's very unlikely that we're going to be anywhere near that. Probably somewhere in the 3.5% range is where I'd imagine the long-term interest rates will settle out. I'm not sure when that happens. Maybe it happens at the end of next year. We'll see.
Okay, Dana, thank you so much.